Back in 2000, Bruce Thomas from Wearable Computer Lab demoed the first augmented reality mobile game, AR Quake. But most people didn't really wake up to the possibilities, or at least on the video game side, until 2016 with Pokemon Go. Gosh, it's hard to believe it was that long ago. That game has since been downloaded 1 billion times and has grossed more than $6 billion in revenue. But beyond games, there's a new trend that's been reshaping AR, and it's one that we want to watch for the future. Hi, I'm Matthew Card, Chief Trend Strategist at the Axel Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. So here's the deal. By 2024, the global AR VR market is projected to be worth nearly $300 billion. They're expected to top that by 2028. That's an eye-popping figure, as this industry was worth less than $20 billion last year. So this is a sector that's growing at an exponential rate as technology improves, handheld devices become more common, AR-based mobile games continue to gain popularity, and then we have innovations like website-based AR being introduced. But there's another big driver of this technology: shopping. And one company is the must-own for every AR investor's portfolio. Snap, ticker symbol SNAP, refers to itself as an innovative camera company that's reinventing this legendary piece of equipment. Along these lines, in May, Snap unveiled its next generation of AR spectacles. This is all about providing AR creators a way to build more immersive environments. But most importantly, we're seeing Snap use AR to allow customers to try on outfits before they buy. This is a major advancement, particularly with the meteoric rise in online shopping. Snap then snapped up. See what I did there?
You serious?
Display technology innovator Wave Optics for $500 million that last month. This was its largest acquisition ever, but again, this all ties back to that AR strategy Snap is zeroed in on. Wave Optics is an AR display supplier. Its technology allows virtual objects to overlay in the real world. Now, Snap's AR spectacles already use the Wave Optics tag. But here's what's really interesting about the deal to me. After the acquisition, Wave Optics will continue to supply displays to other companies, not merely be an in-house supplier for Snap. That's an interesting way to kind of play all these different parts of the field, that you're not just holding the technology for yourself, but you are selling it to everybody else. So I do think that that's very interesting. Now, most of us think of Snap as part of this social media ecosystem. And whether you like it or not, these platforms, like YouTube, grow increasingly more important to our society each year. In fact, most people now get their news from social media instead of through those traditional means like newspapers, dead trees, the nightly news, etc. And on the social media front, though, Snap continues to make waves. All right, it's emerged as a true rival to Facebook and Twitter. The company reported it now has more than 500 million monthly active users. And the growth here is accelerating. In the first quarter, Snap reported daily active users increased 22% to 280 million. It launched a record 321 new channels in the quarter, with 150 partners in 12 countries. And the number of daily active users using the company's AR platform lenses rose 40%. All of this led to a 66% increase in revenue to $770 million. These were the highest year-over-year revenue and daily active user growth in 3 years for the company. But I would hesitate to expect a slowdown anytime soon. For the second quarter, expectations are for a 92.4% increase in revenue to to $844.98 million. We'll just call it $845 million as the company's loss per share declines. And then revenue should top $1 billion in the third quarter. And for the year, Snap is expected to enjoy a fantastic 55.8% increase in revenue to $3.9 billion with earnings of 22 cents per share. So this growth that we have right now is made more attractive as Snap shares trade more than 11% below their 52-week high of $73.59. I like that. We've had this pullback. But here's where it gets even better. Wells Fargo currently has a $91 price target on Snap shares. That's massive upside from where they're currently trading right around $65. The rise of augmented reality is a boon for consumers and retailers, especially as the percentage of online shopping continues to increase. Home Depot, Lowe's, Wayfair, and Facebook's Instagram have all jumped in on this trend. Snap has partnerships with American Eagle, Gucci, and others to use AR to sell products. On top of that, Snap acquired the sizing technology company Fit Analytics to help in these pursuits. At the moment, the AR market is really starting to heat up. There's no market right now that has the growth that we have over the next several years. Apple, Facebook, and Google are pursuing advancements and market share. Facebook and Google are developing displays in-house, while Apple is looking to gain an edge through acquisitions like Snap is doing. Social media is a mainstay in our society, but Snap is moving beyond just posts and tweets to connect consumers and brands through the power of AR. And that is going to be a driving force for its revenue in the years ahead. Well, I'm Matthew Carr, Chief Trend Strategist for the Axel Club. Thanks for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to Howard Jones.